What's going on, guys? Welcome back to another video. In this video, I've got another AMC update for you guys. So in this video, we're going to be covering some of the most recent price action that we have been seeing out of this stock, mainly why we are seeing such a significant decrease in the share price today. Now, we're also going to go over all of the reasons why it looks like the margin calls are right around the corner. So if you guys have been watching my previous AMC videos, we've gone over this not so much in depth. We've kind of spaced it out over a couple of videos, but I found some new information today that I want to make you guys aware of because I feel like it is very important. It's going to have to do with the overall broader market, but we're going to tie it into AMC because it is going to be directly affecting them. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. All you have to do is sign up for an account, deposit over $100, and you get access to those 2 free stocks. And if you guys enjoy the information and analysis that I provide for you in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So it looks like today we are seeing somewhat of a big sale come in on AMC. We are seeing the price go down about 5.3% at the current time that I am recording this video. Obviously, there's a lot of manipulation going on at the current time. We were seeing a lot of bullishness, but that was pretty much short-lived, and we are back down trading above the $10 price point. Now, I also want to give you guys one of my theories on what is exactly going to be setting off this big short squeeze, and I do think it is going to come in the form of a gamma squeeze. So we've been over this in a lot of my previous videos, but I want to make sure that for you guys who don't understand fully what this is, I want to make sure that you guys understand this as well. So essentially what a gamma squeeze is, so here are the steps. So if you are going to buy a call option on a stock, you go out on this option chain and you buy it, and essentially the institution is going to sell you this option. So the institutions are selling you these options, but they are uncovered. When you sell a naked call, your potential loss is actually unlimited because a stock can technically and theoretically go up forever. Now, when the stock starts to get close to the strike that you bought it for, so let's say that you're buying these $11 strike calls. If AMC were to start creeping towards 11, the institutions would have to do something called delta hedging. So what they do is they go out on the open market and buy the appropriate amount of shares to cover their position, essentially creating a covered call, meaning their actual potential loss is now capped. Now, we are not seeing enough volume in order to see a substantial gamma squeeze out of AMC this week. I've heard a couple of people talking about this, but not as many, which I think is a good sign. I don't want to hype you guys up saying that the squeeze is going to happen tomorrow, but it is always possible to see somewhat of a gamma squeeze. We did see AMC close above $10 a share last week, which was one of the main reasons why we saw some bullishness at the beginning of this week. When I think that we could see this gamma squeeze is going to be on one of these monthly expiration dates. So you can see on this option chain right here, we have W, which is a weekly, and then right here, this May 21st, 2021 is a monthly expiration date. Now, I'm not saying that May 21st, 2021 is when this is going to happen, but typically there is more volume in open interest on these monthly expiration dates. We saw that one for April that had a lot of open interest on it. So that's when I am thinking that we could potentially see a gamma squeeze if AMC were to get enough bullishness going into that date. Now, let's take a look at some of these short interest numbers. We can see that the short interest is now, as of today, 23.26% of the free float. That is a little bit lower than we saw yesterday, and the utilization is still at around 100%. Additionally, we also have a very substantial catalyst coming up for AMC in the near future. When we come over to Benzinga right here, we're going to see AMC Entertainment Holdings to announce first quarter 2021 results and host earnings webcast. Now, this is going to be occurring after the market closes on Thursday, May 6th. So in my opinion, we're going to see a lot of volatility around this date. Depending on how AMC's numbers come out and how the market reacts, we could see a significant jump in the share price, which could set off the squeeze, or we could see a significant sell-off depending on how the market reacts. So this is definitely a date that you guys are going to need to keep on your calendar if you are invested in AMC. Now, let's get into why I think these margin calls are coming really soon. So when we come over here, we can see that this is going to be a chart that is going to track the S&P 500 in blue and then margin debt in red. So you can take a look at this chart. You can see that the S&P and margin debt are pretty highly correlated, but when we flip this chart kind of upside down and you invert it, so technically now on this left side, it's a little bit confusing, but when it comes down here, that means that margin debt is actually going up. So when we see this move down, that means margin debt is increasing. We do see somewhat of an inverse relationship. So margin debt does increase up to a certain point as the S&P increases, and then we see a significant sell-off. So this is pretty interesting to note that margin debt at the current time, I think, is around $822 billion. That is the last number that I have seen. And it's massively spiked up over the last year, as we can see by this downward trending red line right here. So we can also come over here. Shout out to this guy on Twitter, Joshua James. He really puts out a lot of good information. If you guys are on Twitter and like to get a lot of good information on stocks, make sure you guys check him out. So we can see that U.S. leveraged loan default rate is climbing right here. So there are more defaults on these leveraged loans. If we see a spike in these leveraged loan default rate, we could see a lot of margin calls start to come in. Now, the fact that we are seeing this start to curl up right here is one of the main reasons why I think these margin calls are going to be coming for these different institutions, hedge funds, banks, etc. And we also see that this is the projected line that we are going to see the actual default rate go on over the next couple of months. Now, when we come over here, we can also see that JP Morgan sells $13 billion of bonds in largest bank deal ever. When we come over here as well, we can see that Bank of America, sorry, my computer's taking a long time. We can see Bank of America to set record for largest bank bond sale at $15 billion. Now, why would they be doing this? Right here, they are expecting more defaults. They need to have enough capital on hand in order to cover the potential defaults coming in the future. Now, when you combine that with this right here that I've talked about a lot in my previous AMC videos, this new stress test, we've seen JP Morgan actually add about 17 of these netting accounts, which suggests that they are expecting more defaults coming in their mortgage-backed securities department and fixed income, which is what we can see right here. And the DTCC is doing a capped contingency liquidity facility stress test. And we can see the dates for this right here, as a lot of you guys know, Monday, April 26th. So it's not like we just have one of these little clues that we are looking at saying, oh, maybe margin calls are going to start coming in the future. Now, these margin calls could apply to a variety of different institutions, but the most likely outcome is that a lot of these different institutions that have been shorting AMC over the past couple of months, years even, they are so far over leveraged on their position because they've been continuously creating synthetic shares and selling them on the open market, creating a naked short position. So again, it's not like we just have one of these little pieces of evidence coming out that, oh, something could be going wrong behind the scenes. There's this stress test. There might be some increase in the margin out on loan right now, and there's an increase in default. No, we have all of those things playing into this situation right now, which is why I am so bullish on AMC over the next year. I do think that the squeeze will take place over the next year, but I've heard a lot of you guys, a couple of you in my comments saying, oh, it's going to take a year. You're crazy. You never know when this could play out. This could happen tomorrow. It could happen 6 months from now. It could happen a week from now. We really don't know. I think it's going to be like a domino effect where one of these funds is going to fall. They're going to have to cover their short position, and then we are going to see the other ones follow suit. Now, we also could see the gamma squeeze set that off as well, which I had gone over previously in this video. So there are a lot of ways that we could set this off. And in my opinion, retail is in the best position possible right now. We are holding the winning hand, and it is our battle to lose. Now, nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. I am here to try to give you guys the most up-to-date information and analysis on this AMC situation, as as well as some other stocks. But I do think with all of the evidence that we have right now, with the retail sentiment on AMC that we all want to hold, I think I saw the floor now, everybody is saying at 500,000. So that means to all of you guys who don't know that nobody's going to sell once it gets to 500,000. People would sell once it goes past 500,000 and then it comes back down to the 500,000 because a lot of individuals want to sell on the way down, which I think is a smart thing to do. But again, not financial advice. So that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys were able to mitigate some of your losses today, maybe in a couple of your other positions, and I'll see you guys in the next video.